Let's welcome on board Siddharth Khemka as well. Siddharth, what's been your reading of the numbers from Zomato? Do you see a meaningful upside? And if somebody hasn't really joined the party as yet, is it a good time perhaps to add position or just stay away?
Yeah, I think if you look at the overall numbers, while the food delivery business was something which was little bit below expectations, Blinkit is something that has been really taking off and delivering better than expected numbers. The stock price has seen a sharp uptick and mostly factoring in what the near term, or at least the food business. What could surprise is the faster than expected growth in Blinkit, and that I think most of the analysts are not factoring in right now. So overall, I feel that the delivery is happening. They have been able to pass on the platform fees that they have increased over the last couple of quarters, and that has helped them in that profitability, which the market is liking, especially with the likes of Zomato and the new age e-commerce companies. So I'm very positive on the overall trend with Zomato. We have a positive view. We have a buy rating. We see a decent upside to current levels. May not be a meaningful upside, but as I said, the meaningful upside would depend on the outperformance from Blinkit, which could be the key factor going forward.
Right. Today, of course, Zomato is seeing a bit of a correction come by. 186 is where the stock is. Was hugely volatile when the numbers came pretty much around the same time yesterday, or a little half an hour later than this. And clearly that margin miss did not go down well with the street. You saw the stock tank and then that recovered. But today, of course, has been a bit of a rough patch for Zomato, which is currently at 186 thereabouts. But Kunal, do you see this weakness getting covered anytime soon, or do you think Zomato is going to hit some amount of resistance?
No, I think it's already hit the major support level. I think 185 approximately was the key support for the stock, where in the last 1 month, the stock had tested this level twice, thrice, and from there it had bounced back. So broadly, when we look at the charts over the last 2-3 weeks, the stock has been confined into a trading range, 184.5 as a support for the stock and 200 approximately as a resistance. So this is almost like a 7-8% band for the stock over the very near term. Maybe it could probably expand to a 10% band, where we may look at a retest of the 180 mark in terms of the key support. But I would probably believe that that could be a good contra buying zone for Zomato. So I would probably wait out for a dip. Maybe another 4-5 points from current levels could be a good re-entry point.
Okay, let's see whether that re-entry point is made use of by the investors or not. But other than that, what else is happening in the market is all of these shipyard companies, the PSUs, they are the ones which are firing away. So whether it's a Realty Corp or a Cochin Shipyard or even the other metal companies as we are talking about, they're definitely gaining ground. That's a conversation we also had with Mahesh Nandurkar earlier in the day, and he talked about how PSUs still seem to be having value on the table. We'll try and play out that bite. But before that, Siddharth, what's your view on these PSU entities? Do you still see value on the table in any pocket?
So, Anisha, yeah, I think the overall theme for the PSUs has been now linked to the elections and the outcome of the government, and hence we saw initially a strong rally and then some profit booking with the concern in the market. If you look at the long-term picture, I think definitely there is a lot of value. The core industrials sectors have been doing very well with the focus on manufacturing and the capex cycle picking up. We are definitely expecting a strong growth momentum ahead, despite whatever government may come out, the outcome may be. So I think if you look at some of these PSUs, public sector enterprises, they are mostly either in the capital goods space, defense, railways, power, utilities, so metals. I think these sectors definitely have a runway of growth. If you look at again, specifically if you look at the capital goods space, we believe last few years have been fueled by the government capex. But now the private capex cycle is also picking up, and with what we are seeing, the order book growing for a lot of companies, execution has picked up, and the valuations have just started picking up for the public sector capital goods companies compared to the private sector, which has been trading at a huge premium. So, with the growth, strong order book, we believe there is still a lot of value left on the table. Something like a BEL, Bharat Electronics, which is a preferred pick within the capital goods space among the PSUs. is something that we like. It both capital goods as well as a defense play, and has a very strong order book plus execution, and one of the larger companies within the space. Hence, we like Bharat Electronics.
Right. Okay, since we're on the subject of PSUs as well, listen in from Mahesh Tendurkar as to what he said specifically about this particular segment.
I would still say that some of the stocks on the state-owned side, the PSU side, actually still look pretty interesting on valuations. I believe that many of the PSUs have not seen their historical multiples coming up just as yet. And so many of the PSUs, whether it is oil, whether it is coal mining, side, etc., are actually looking reasonably depressed in terms of valuations according to us. So maybe that is one segment. I would also say the PSU banks as well, to just extend on that PSU side.
Welcome back. Well, the Nifty is now well above the mark of 22,200. So it's almost been a 500-point recovery almost from the kind of cuts that we saw yesterday. We were threatening to go below 21,800 yesterday, and from there, it's almost a 4-5-point 100 rally. But talking about individual names, HG Infrastructure deserves mention because of that 17% rally. Godfrey Phillips is high by around 8%. And the stock that we were highlighting earlier, Apar Industries, that's managed to pull on quite a bit of gain at the moment. So that stock is flying away. What's under pressure is clearly UPL. Cipla is also seeing some profit booking, and Chalet Hotels is fairly muted. We did speak with the management earlier. They said that the prospects are quite bright given the fact that demand continues to outpace the supply, and growth from here on will be led by both occupancy growth as well as rate revisions. But would you concur with the view, Siddharth, that the best perhaps for hospitality is over and it's time now to take some chips off the table? And this could be true for a lot of discretionary and urban discretionary demand trends. On one hand, while the overall commentary for rural recovery has been strong, urban has been moderating. Would you get into a sector churn on account of this?
I think last few quarters we have seen how the urban consumption growth has supported the overall consumption theme, and rural was taking a backseat. But now I think some of the companies in the consumption side, the results have come and they have said that the rural is picking up pace. Urban, on a higher base, could consolidate. And clearly, to play that theme, you can have a churn. So we are liking something within the consumer space is a two-wheelers, which we believe is more attuned to the rural and the semi-urban theme. The valuations are comfortable. The monsoon expected to be good. And post-elections, we believe there could be an uptick pent-up demand, especially for the two-wheelers in the entry-level segment, where Hero MotoCorp has a very strong presence. They have brought in new models, and the focus there definitely helps them to cater to that increasing demand. So overall, I think the consumption story continues. But if you look at the some of the staples, which are again more tuned to the rural theme and the monsoon. The commentary is suggesting that going forward over the next 2 quarters, we could see a growth largely backed by the rural theme, and hence we are seeing interest in a lot of these staple names as well, the likes of Dabur, Marico, which have done well, Tata Consumer, which is our preferred pick within the overall consumer space, and then followed by ITC. So I think one can reposition. Also, given the factor that there is a lot of volatility in the market, this sector serves as a defensive bet. Plus, they have not participated in the rally so far. So all these things make this space look attractive at the current juncture.
Yeah, names like we flagged off earlier, of course, they are the ones which are really holding up high. Not to say that they've not had a parabolic move in any case in the last 2 years. But Cochin Shipyard is the one which is really the shining star today. It's almost up double digit after receiving that 500 to 1,000 odd crore rupee order from a European client. That, along with GRSE, is as well as Mazgaon Shipyard as well, is the one which is holding out very, very smartly. There you go, an 8% move coming in on Garden Reach. Mazgaon as well, higher, pretty much by the same quantum. But Siddharth, can these shipyard names be bought afresh is the question, or added to the existing positions?
Yeah, so Aisha, I think although we don't have coverage, defense is something that has a very long growth story ahead, and they've just got order books from the government. They are also getting a lot of orders for exports. So I think the runway for growth for some of these shipyards is very strong and very high. And any declines that we see in this stock would only be an opportunity for long-term investors to look at this space. So, the growth potential is very strong. They have the capabilities, they are building the capacities, they have the order book, and the execution is in place. So, I would believe that from a 2-year, 3-year perspective, the space would continue to do well.
So the space will continue to do well, and given the kind of order inflows which are expected, is something to definitely watch out for. Quickly taking a look at some of the other big buzzers in the trading session, you have Nalco, which is up 7%. Adani group of stocks is actually doing quite okay. Birlasoft is the other one which is holding up. Naresh, within the Adani pack, whether it's Enterprises, Ambuja, ACC, all are doing quite well. What would be your top bet?
So I would continue to stick with Ambuja and ACC because that's something which is making stronger charts and is retesting the previous highs. So we went above those 600 mark on Ambuja Cements, went up to 640 and now back to 580, 600 levels. So that looks promising. The other name always has been Adani Ports, but it has already moved up quite a bit over the last 3-4 months. So as of now, ACC is the best one because that's the one which has not gone up, corrected well 10-12% from the top. So out here at 2300, 2400, that looks the most promising.
Okay, that's the take coming in on some of these buzzing stocks in trade. In fact, let's take stock of what's really happening with some of the chemical names. Look at UPL, for instance. That's down a sizable 5% as we speak right now. Analysts are anticipating that the industry headwinds are going to continue for FY25 as well. And, a couple of brokerages have cut their price targets and EPS estimates as well. On UPL specifically, that stock languishing by about 5% or so. But Kunal, on the charts of UPL, SRF, PI Industries, etc., do you think we're close to a bottom anytime? And can these stocks be bought now?
So UPL, I strongly believe that a bottom is already in place. 460, 465, I think was a major support. In fact, the stock tested this level thrice in the last 3 odd months, where it took multiple supports. The volumes were a lot more higher for UPL at that point of time. And the recent breakout, I think yesterday's breakout was again an indication that the stock is trying to come out of this major corrective wave, which has been going on for, I think, the last 1 to 2 years for UPL, if not more. Now, the concern with the other group of names is the likes of SRF, for example. That stock has confirmed a breakout of its major moving average, and I think it's also broken up below a critical support. 2450, 2400 was the previous crucial support for SRF, and the stock is almost 8%, 9% below those levels. So I would probably believe that the stock should take a lot of time to try and make a comeback for itself. I think given the current situation of the market, I think it makes a lot of sense to go with stocks which are already riding on high degree of momentum and stronger volumes rather than stocks which are going through their own corrective phases. So I would probably ignore the likes of SRF, PI Industries, etc. But UPL could be something which is interesting.
Okay, UPL has made a bottom and watching out for that. But Bharti Airtel, that stock will be in focus on account of the earnings later today. The ARPU expectations are around 210 rupees, but the stock has actually moved into the green. Within telecom, Siddharth, do you think Vodafone is an investable idea? Because there are parts of experts which believe that the stock still has potential despite moving from 10 to 15 bucks. What about Vodafone, and if you have any view on Airtel then?
Yeah, Anisha, I think Vodafone, the challenge continues while the recent fundraise and capital raise is definitely a big positive and give it some more lifeline to kind of do the business. The challenge has been so far that because of lack of funds, they have been unable to invest in 5G capabilities. While you see the competition, Bharti Airtel has already completed the rollout of 5G. So it will give them the money, will give them the capability now to invest and bring up the quality of calls to a 5G level. So the loss of market share can be arrested. The challenge is FY26 onwards, the moratorium on the repayments will end, and they will need to generate that kind of EBITDA cash flows to see the kind of debt repayment that they have. And that is where the challenge will begin. So a lot of hopes are now on that the industry will increase the tariffs post the election, of which a larger or major beneficiary would be Vodafone. But we believe that Bharti, which has a very stable business, has been a market leader, is now a free cash flow generating company. So any tariff hike will definitely go positive. And the kind of dilution that we have seen in Vodafone, I think I would not prefer that name over Bharti. So Bharti is something that we clearly like, and we have a positive view on there. So our preferred pick would be Bharti Airtel. Currently around 1400 is our target price. But today's result would again kind of give more clarity into the future direction.
Clarity awaited there from Bharti's commentary. In fact, let me take it across to Somit as well, find out what the ET Now poll is penciling in for the numbers.
Well, on a consolidated basis, if you see sequentially, the numbers are expected to be stable. The revenue and EBITDA is expected to be high by anywhere between 2 to 3 odd %. Margins are expected to come in at around 53%, while the net profit could jump around 34% on a sequential basis. However, the numbers could come in actually a bit below than what the street was expecting, and that is because Airtel Africa, which reported its numbers few days back, reported a weak set of numbers. Airtel Africa accounts for nearly 27% of the consolidated numbers, and the numbers were weak owing to the devaluation in its currency, that is Naira currency. In Q4, if you see, Airtel Africa's reported revenue and EBITDA were down around 17% and 21% on a YY basis, and both the numbers were below the street expectations. However, the India mobile business number, that is expected to report a stable set of numbers. There, if you see, the revenues are expected to be higher by around 2 odd %, and this will be aided on the back of higher subscriber addition and a higher ARPU. Now, ARPUs are expected to increase around 1% on a sequential basis, and this increase in ARPU will be purely on the back of 2G subscribers transitioning to 4G, which translates into higher ARPU for the company. Subscriber base is also expected to be around 34.94 crore as against 34.5 crore that we had seen in the previous quarter. For the other businesses, if you see, the home broadband business is expected to report a stable set of numbers on the back of subscriber addition. Enterprise business also expected to report a healthy set of numbers, while the DTH business numbers could come in a bit weak from Bharti Airtel. Now, apart from earnings, what are the key things to watch out for? Firstly, what is the capex guidance for FY25? What is the expectations of a tariff hike to come in the telecom sector post-election period? How is the market share shifting towards 5G? And what are the key trends that the company is seeing when it comes to customer behaviors? 5G rollout would be important to track from Bharti Airtel earnings.
Okay, thanks Amit for that. We'll watch out for that. But let's take the closing trade ideas from our technical experts. Naresh, you go first.
So that would be a buy on Tata Steel, and the stock has bounced back from the supports of 160 and now is setting up for a move towards a 52-week high. So expecting this to take leadership in the middle pack going forward.
Leadership Tata Steel, and the stock is clearly seeing quite a bit of price volume action today. Kunal, what about you?
So I'll go with Engineers India. Very interesting chart. The stock is confirming or on the verge of confirming a breakout above the previous highs of 250 on closing basis. So looks very attractive, and expecting this momentum to continue, and hopefully the stock coming back towards 275, which was the previous major highs.
Right, so that we'll let you go on that note. Thanks as always for taking the time out and joining in. We'll take a very quick break with news that we are back at that 22,300 print on the Nifty futures.
If you like this video, then like, share and subscribe to ET Now.